Just a little segment from Shoein this week.
Consumers have said pretty loud and clear that while they expect prices to go up in general, maybe not as many of them, but they do expect prices to go up, but they don't intend to go down in quality in the product that they're buying.
Hey folks, welcome back to Shoein Show. It's that time of the year where family retailer cash registers are ringing, parents are popping bottles of champagne, and kids are crying. That's right, folks, it's back to school. Hallelujah. It's one of the pillars of our annual sales seasons for the footwear industry, back to school for many folks. So Matt, as we kind of unpack 2026, it sounds really strange to say we're midway entering into August, into the next school year already.
I know.
I don't really know where the summer went. I mean, I spent most of it watching soccer and not doing any work, so it's really hard.
You got to catch up.
Yeah, I know, exactly.
You're not supposed to say that with your boss on the line.
It's all right. He knows.
You know, I've known for years that he was not going to.
I gave him 6 years heads up this was going to happen.
Did.
Right? So
He did. And he had Claude running in the background, so work was getting done. So
I'm AR right now. I'm not even real. I'm very good at setting these things up. Anyway, Matt, so as we go back to school season and looking at all the trends that happen, of course, we do an annual survey. This year's with our dear friends from AlixPartners that we focused on. So I'll let you tee up our guest and kind of do the intro as we roll through what we've learned about consumer behavior ahead of back to school.
yeah, thanks, Andy. Bryan Eshelman, who is at AlixPartners, is no stranger to the show or to our events or to the partnership with FDRA. And Bryan and his team, in collaboration with us, have put together this survey for back to school to get the temperature of what shoe shoppers are thinking. This is one of the Super Bowls of our industry in a given year. And beyond that, we took our shoe executive survey and then we kind of merged the two to see how execs are feeling and how that compares to how consumers are feeling. So Bryan, out of the gate, first, welcome back to Shoein Show.
Yeah, glad to be here.
Secondly, like, what are the headlines relative to what your team found when you went out and surveyed the people, the masses?
Yeah, I mean, I think at the highest level, the headlines are a continuing set of trends that we've been seeing for the past few years. I mean, certainly with all of the supply chain disruption and the tariff situation and just inflation in general, that's pushing on both ends of this, right? Shoe producers are feeling those costs, having to pass through as much as they can to the consumers. We're seeing that in the data in terms of price increases. And then consumers on the other end of the spectrum have less and less discretionary income, particularly in the lower income households. And we've seen kind of continued divergence in the K-shaped economy, and that is certainly hitting home in the shoe markets as well. So it's really pushing on both ends of the spectrum, a continued trend. And we see consumers taking some interesting tactics, perhaps, as they see these pressures on their wallet.
One of the things that stood out to me is this divergence between executives. I think 80% of executives surveyed felt costs were going to go up or had that anticipation. And only about half of consumers felt like prices would go up. So there's a disconnect there. Who's going to win that battle? I assume the consumer, and the executive will blink when it comes to prices. But what do you expect the outcome of that divergence to be?
I thought that was an interesting kind of set of stats from the survey as well. It's interesting, I think, a couple of things. I think just at the foremost, the intersection between those two tensions, if you will, in my mind, is quality and value, right? Like the relationship between price and quality. And consumers have said pretty loud and clear in this survey that while they expect prices to go up in general, maybe not as many of them as the producers do, as the manufacturers do, or retailers, but they do expect prices to go up, but they don't intend to go down in quality in the product that they're buying. They want to make sure that those precious dollars are being invested in shoes that'll last, that are comfortable, that are durable. And if that means sticking with a trusted brand that they associate with those features, if you will, then they're going to stick with that brand. They're not going to trade down on brand. So I think that's really at the kind of intersection between these pressures is Manufacturers really need to understand that the consumers are shifting away from buying brand for brand's sake and buying instead brand for their perception of its quality, comfort, durability, etc. as a real strong.
So it's kind of like if we look 5 years ago, let's say, parents would get like peer pressured by their kids to buy a certain brand, right? With the swoosh, with the 3-stripe, with whatever it was, right? Whatever's coming out. And now there's more of a give because there's so many more brands in the market, I think, many different types of shoes. One thing, Bryan, you and I kind of talked about on a call not long ago was this kind of idea of what is athletic shoes to a consumer now. We kind of have this idea in the industry of like what an athletic shoe is, and maybe it's like a running shoe or something, but it's just broad now. It's like almost all encapsulating of what an athletic shoe is to a consumer, casual or whatever. So I think there's just these like changes that are happening based on our industry shifts as well as the consumer shifts. So one thing that I always look at around this time too are like the discounts, right? What's the merchandising strategy that some of these retailers are deploying and brands are deploying? And of course, traditionally you do like a BOGO or something, or you do my concern, Bryan, is just inventory levels.
Yeah.
And it's a question of like, if to Matt's point, if an executive thinks the price is going to go up to here and that's where they start, then obviously they're going to do some discounting somewhere if the consumer is not going to meet them there. But how do you do that? And then how do you make sure that you're not sitting on inventory at the end of back to school as well? I think that's a constant concern that brands might have as we kind of land on this. I'll say this too. I was in the mall the other day, which is shocking to many people who know that it's probably the first time in years I went, but we took our kids. We just had to get out of our house and it was way hot. And so we went to the mall, and it's Tyson's. So it's not a typical mall. Tyson's is like creme de la creme type mall, right? So it's like very big. But it was interesting how all the stores had discounting going on, and they were different. And one of them were buy two, get two. So I was just like, my wife was like, what does that mean? I was like, well, you buy two, you get two. But it's an inventory moving strategy, right? They're just trying to move inventory. So I think that'll be interesting to see as we go along this kind of path and we get closer to back to school. To Matt's point, who is going to blink and what does that look like? And like, what's the plan B to move inventory? I think it's just very interesting.
Yeah, no, I think retailers and brands in general have gotten a bit more sophisticated as it relates to inventory management, forecasting demand, using AI and other more sophisticated approaches to that. The survey, if I recall correctly, the executives were in general talking about lower inventories this season over last.
Yep.
So I think there's also a bit more of a discipline and mindset of trying to make sure that they don't end up with excess at the end of the season, particularly with consumers being so cautious in their purchasing. I think the wild card this back to school season, I think, is probably gas prices, right? Mm-hmm. And, that is such a here and now, day in, day out, week by week pressure on people's wallets and how much they're willing to spend on any given week or month. So we'll see how that plays out. Doesn't seem to be heading in the right direction for the consumer at the moment, but we all know this has been a whipsaw. But, consumers in our survey also said kind of, I think, in a way of getting ahead of expected price increases, perhaps getting ahead of not being able to buy the pair that they want to buy because of inventory, probably as a way of managing their budget over the longer term, are expressing that they're going to shop earlier and earlier. And 1/3 of the respondents said they would shop earlier this year. So I think that is another tactic that consumers are using to kind of spread out these purchases.
Be too late, Bryan. I mean, in a sense that the May and June inflation numbers for footwear were elevated, and they were above and beyond overall inflation. In fact, kids' prices in June were up 5%. Overall, footwear was up 4.1%. And that's all attached to the tariffs that have been implemented. We haven't even gotten to, at least as far as we can tell, both statistically and anecdotally, whatever price increases come with petroleum-based inputs that go into footwear. So the consumers, you have to see that. But part of me thinks like maybe the consumer just anticipates that costs will continue to go up, and that 30%, it's like, I better get in now, even if prices are at an elevated position, because it's just going to get worse and worse over time.
Yeah, I mean, I think for sure that is part of the dynamic here and why they're shopping earlier and trying to kind of lock in a price while because they're seeing that inflation happen. They do perceive even more of the consumers in our survey that are saying they expect prices to go up. Even more than that, I think nearly 80% said they've perceived that prices have been going up.
Mm.
So they're certainly noticing. It's hard not to, I guess.
Yeah.
But they're certainly noticing, and I think that does factor in. Like people's price expectations get set through multiple interactions and shopping journeys over time. People are just mentally and even subconsciously, your price expectations don't get reset by one purchase, but certainly as you're exposed more and more to prices being persistently high and higher, that changes your mindset and expectations. And I think that is definitely part of what's going on here in the market. Yeah, that on the other side of the equation, though, and you guys will know much more precisely than I, but just in dealing with some of our clients this year on the tariff topic, we still have things to come perhaps in the back half of the year. But the Supreme Court decision, the refunds and rebates, pricing perhaps inbound goods because of the lack of the more severe tariffs on a lot of the product categories is a bit of a tailwind for manufacturers and retailers and perhaps offers them a bit more flexibility on price going into the fall season. By and large, the fall goods are here, right? So any new tariffs are not likely to affect the 2026.
Well, I mean, to that point, the ports at our sourcing event recently basically said June was one of our best months of the year, if not will be the best, because of the seasonality, obviously bringing in goods, but also a lot of people pushing goods forward because you just have that 10% right now. And with the expectation, there could be upwards of 20%. Most of our members are costing at some point hitting back to that 20% duty rate on top of the traditional duties. So a sneaker would be a 40% duty coming out of Vietnam. And so there's a lot of hedging happening, which will keep prices elevated. But in the meantime, maybe create some of those tailwinds that you spoke of, even if it's only for a month or two.
I mean, I think it's like, if I were doing it, it's like a split, right? Part of it is you getting some of your margin back that you lost. I know some people are also talking about like, if they got a refund, maybe they would talk to their factories and like try to help them out a little bit too, to make sure relationships forward are still very useful in pricing and being flexible. But also I think it's just cash flow. You're going to need cash flow for the next wave of these tariffs coming in too. So I think it's a little bit of everything. Is if you're an executive sitting there looking at what you do with this capital coming in, how you deploy it adequately and how much you keep in reserve for what might come next. There's all these supply chain whiplashes kind of keep happening. One thing that was curious to me in the report is kind of the behavior, Bryan, around like where people are shopping. And like we see a lot, I think people are still like constantly like doing their research online, but obviously with kids' feet, you got to go in the store if you want the right pair, et cetera. I also think in certain ways, we saw in the report, outlets are doing quite well, maybe because of the inflation area. So just your thoughts on where people are showing up to actually purchase the product.
Yeah. I mean, so given the expected price increases, given the desire to retain or to focus purchasing on high quality products and brands, the top three kind of tactics that consumers are saying that they're taking in order to kind of mitigate all of these factors. Number one was sticking with brands they trust on this quality and durability topic, but buying fewer pairs. Number two was a shift to lower price retail environments. And so I think that does bode well for outlets. It does bode well for discounters who do have branded product, maybe less well for the specialty end of the spectrum, particularly kind of the branded specialty retail part of the spectrum. But they want to stretch their wallet. And that certainly shopping in the outlet environment is a tried and true method for consumers.
Bryan, you have a lot of experience, obviously at AlixPartners, but also as a senior executive at Aldo. And over the years, there have been times where the American economy is in recession, but footwear is actually kind of humming along. And then there are times the American economy is doing fine and footwear is taking its lumps. I mean, what's really kind of blowing all of our minds is the resiliency of the consumer. Each month, the consumer continues to show up. That's can only last for so long, and we don't know when that other shoe will drop, pardon the pun. But in your experience, kind of how resilient do you think we can be through all of this in spite of all these headwinds and maybe a couple of tailwinds here and there? It seems like consumers just like humming along, but is there any expectation the back half of the year will actually be more difficult based on the survey results alone?
Yeah, I think a couple of things here. People, the last place they cut is their children, right? So in terms of back to school, people want their kids to go back with everything they need and protect potentially everything they want to be ready for the school year. And stating the overly obvious, their kids' shoes are being outgrown and need to be replaced, and kids are a lot harder on shoes than adults. And all of those things those don't change with the economy, right? They don't change with the macro. I think the stock market, at least for some parts of the economy, has been a good news story. It's starting to feel a little bit like the bloom is maybe fading, but I think that's propping up just overall consumer sentiment. The jobs stories continues to be fairly steady and supportive. Inflation started to moderate. We'll see if that picks up again into the fall. So I think these factors are all there. But I would agree with you, just across the board, the consumer has been a surprisingly bright spot in the overall economy, just given kind of everything that we observe. And I think I don't see a reason why that would change unless there were some kind of major shock.
I think it's a lot like politics right now. When people show up in the voting booth, they pinch their nose and pull the lever. They're kind of showing up to retail, pinching their nose at the prices, but still purchasing, right? So they're not happy about it, but people are still
finding ways to make it work.
They're still,
It's a
great American pastime to complain about something, right? So it's an easy thing. But
we've had like historic increases. Like our tariffs doubled, prices have historically kind of skyrocketed, and the consumer's kind of like, eh. And I think it's short-lived, particularly if the oil prices continue where they are. But that dip, that 3.5% increase CPI number in June was like hailed as like this great political and economic accomplishment. It's like, no, it's still growing.
Right.
The rate of growth is slow.
People forget that's on top of last year.
Right. And then now gas prices are back above $4. So to your point, this is a gas price. Like we're all nibbling around the margins on footwear prices, but predominantly it is a gas price issue. And to your other point about how the consumer kind of perceives cost increases, my perception of cost increases is all through my vacation bookings. Like everything is so freaking expensive, Airbnbs and hotels. I'm like, who's paying these prices? Rental cars. And so I just assume everything is now expensive, and to Andy's point, that's kind of, we'll complain about it. But my perception is just not even based on footwear prices. It's based on other things.
Yeah, and we'll blame that on Andy and his World Cup travels.
That's right.
That's all right. You can do that. I'll take the hit.
There's a video online where they're interviewing like folks who've come into the U.S. to view, and they ask them how much they spent. 100,000, 80,000 to come and spend 40 days. It's insane.
That's crazy. That's a different kind of, I'm not in that level. Like I'm a fanatic, but
You're a fan, but not
an idiot.
Fiscal discipline, I guess. Fanatic, but fiscal discipline. I think in some instances if we, at our sourcing summit, we normally give out like gift cards for people who ask questions or engage, et cetera. We did gas cards this year because we thought it was kind of clever. People actually really like that. But I think there is something where, and of course I always do this on this show because I don't actually have to do the work, but I just give the idea. But I think taking a playbook out of Black Friday and having one day in late July or August, a retailer should be like, look, first 50 people that show up get a $10 gas card if you make a purchase, right? Something that's tied into this knowledge of acknowledging that we know these prices are higher and we're trying and we know. So I think there's something to that. But I think my point about that is like the merchandising strategies, Bryan, is you were talking about this K-shaped economy, right? And we saw in there too where more affluent people were going to buy more shoes and less affluent people were going to trim how many shoes they had. Like, how difficult is that for a retailer to like figure out like what inventory levels and price points and product types they're going to put in stores to make sure they capture the rise in affluent spending, but also I mean, I think the great thing about Footwear is they are part of the community. So they want to make sure they service those folks and they get what they need in the community. So how they price it appropriately for less affluent people that they can still purchase what they need, right? I think that, I don't have an answer to that, but I think that's the challenge, right? That's the big question of.
Yeah. I mean, I think that's an enduring challenge of a merchant or merchandising organization. I mean, you need a good, better, best selection in terms of the price ladder, and you need to do that across all categories. And good doesn't mean cheap or low quality. And that's even more so in this environment. So you need to know who your consumer is and who's coming through the door and on the webpage, and make sure you know what their spending proclivities are, their wallet size is, and make sure that you're meeting them where they are. I mean, that's an age-old merchandising challenge.
Is it like for like reward programs and do all those things like help in that situation where you get to learn more about your customer and track more information?
We had that in the last survey, the spring survey. I think we talked about that, right, Bryan?
Yeah, for certain. I mean, look, it is particularly in a world where you can get less and less from the big social media providers in terms of first-party information. Having a good loyalty program is a great way to learn about your customer and their preferences. It's a bit of a challenge. I mean, it's easy to envision in Starbucks when you're there every week. It's harder to envision how you develop a program like that for something that's less frequent in terms of purchase. But there are retailers that have footwear retailers that have really well-developed programs and are creative about that.
I mean, we don't have time for it today. Maybe we'll bring it back at another point, Bryan. But agentic commerce is like where ultimately the brands and retailers will be engaging in marketing to AI bots to get sales rather than to actual human beings. Like that's around the corner if it's not already here. And to me, that's like a brave new world. I mean, it
changes everything.
It changes everything. I'm no longer marketing to Andy on his boost Adidas. I'm marketing to Andy's Claude bot who goes out and surveys once a week the prices for Adidas Boost and then purchases them his size 12 when the time comes without Andy even directing it to do it.
Yep. Yeah. Yeah. I mean, just think about how much investment has gone into the website experience built for a human being, the performance marketing, the social media strategy. All of those things are tailored towards capturing our attention. And it's a completely different ballgame to capture the attention of a bot. So
that means it makes being a brand more important because it's brand loyalty at that point that's going to win in that environment because the bot or whatever I set up my system to knows exactly the types of shoes I like. And then, maybe it might go out and find something, an alternative based on what's in my closet, but it knows my fit. Like for a consumer, it's going to be great. For a brand, it shouldn't be scary though. This is where you can actually get subscription models that would work and function really well. Actually, where you could get returns from the consumer back for resale models. And so there's a lot of opportunity where there's going to be a lot of change and it can be a little bit frightening, but there's also, just huge opportunities to reach these models.
The Google AdWords will turn into a collaboration between ChatGPT and Nike. I'm just throwing that out there, right? To where it actually, they put the thumb on the scale because they have the funds to have that recommended more often than not, because essentially a more dynamic Google AdWords.
Yep. Yeah, but I think it puts a lot of pressure on making sure there's a lot more information available to the bot around size and fit and durability and price and inventory and things like this that might be dry and boring to read for a human being and not all that glitzy on a website or a social post, but it's that data that behind the scenes, presumably the bots are going to be scraping and looking for.
Yeah. And I would say to folks too, in the survey, you can go to FDRA.org to find the survey, or you can just email us info@FDRA.org and we'll send you a link to the survey so you can see that. But the consumer survey team on AlixPartners actually put in information in the survey about AI. Like how trustworthy is AI? What are you using it for to shop? There's still, like, from a consumer base, there's still some curiosities and not a lot of trust in there. So I don't want to dive into that now because we're at the tail end of this, but there's just a nugget to go in there and find that, because I think building business models around this, you still have to engage the consumer, and that you have to have the consumer that trusts your engagement with these new tools. And how you do that is going to be very interesting, I think, going forward. No one has the answers, but it's almost like you can't just build these tools because they're functional. You have to build these tools with the customer in mind, that you're going to have this engagement relationship, and they're going to trust you, and you're going to deliver what you promised on this stuff. So it's still very human, even though we're going to this different artificial system. But I think it was interesting that your team was thoughtful enough, and this is why folks should contact and work with AlixPartners, is the thoughtfulness of approaching these things, not just from technology. Of course, they're very good on the P&L, but like, what's driving the P&L? And it's relationships, it is the brands, it's these decisions that you make that matter, not just to this quarter's numbers, but like your overall business, right? And that's why we partner with AlixPartners. Probably why the partners are in their name, but
it's a requirement.
Bryan, I don't know if you have any final thoughts about back to school, whether you think we're going to be up, down, et cetera, or any kind of key takeaways, but I'll give you one last push as we kind of.
Yeah, no, I think the survey, as you mentioned, people should get a hold of it. I think it has a lot of interesting kind of double clicks. And if folks want even more behind the scenes on the data, we're happy to engage in that and provide that. Whatever's useful to people in the industry, we're here to do. So thanks for the time. Really enjoyed the conversation as always.
Yeah,
Absolutely.
Thank you, Bryan.
Yeah, thank you guys. And folks, thanks for listening. As always, Shoe and Show, new episode every Monday covering different aspects. We've had recent shows on footwear culture. We've had it on business. We've had it on supply chain, tariffs, et cetera. Anything that we think is important to our industry and trying to grow it and sharpen it. We try to have these conversations with Shoe and bring you in. We appreciate you pulling up a chair and joining us today for this conversation. Again, the report, the back to school report, and our partnership with AlixPartners is on FDRA.org. You can download it from there. And again, if you want deeper dives, just email us. We'll put you in contact with AlixPartners team. And again, thank you for listening. And until next time, Shoe In is out.
Shoe In has been brought to you by the FDRA, the Footwear Industries Association focused on retail, trade, politics, and fashion, helping create and enhance conversations on all things footwear. For information about FDRA, visit fdra.org.